So let me start the recording. So, ladies and gentlemen, I want to introduce to you Monica from RPI Education. She's going to blow your mind. That's the bottom line. Um, so I'm expecting a small explosion up here coming soon from what she has to offer. So listen and take note of the information that you'll be getting. Monica, over to you.
Excellent. Am I okay to share my screen now?
Yes, you are.
Perfect. Okay. Can you see my screen?
It's coming up slowly. Yes, now we can.
Okay. And let me put it to, sorry, all my bars are blocked. I'll just put it through to full screen. Sorry, I can't see here. Second. I'm getting old. I need glasses here. From beginning. Here we go. All right, amazing. Thank you so much for having me, Dave and Karen. I really like what you're doing with these groups, Dave. I should have probably came on bang yesterday morning at 8 a.m. and it was just been very, very early mornings here. So I wanted to make sure I was 100% alert for this morning as well. So I've been up super early preparing, and I'm really excited to do this presentation for this group. So today we are going, thank you, Karen, for doing this amazing little clip that I'm sharing here. I'm really excited to talk to all of you about investing and building wealth through real estate. And that's what we will do for the next 20, 30 minutes. And I really want to show how real estate investing can help you create this time, money, freedom in your life like it has done for us. So basically, my name is Monika Jazik. I'm a real estate investment specialist and wealth builder and founder of RPI Education, which is the world's fastest growing investment community. So my husband and I started investing in real estate almost 14 years ago. And I'll get into my backstory a little bit then. But it's been a long journey, and even to this day, we are full-time real estate investors. So what does that mean? Is that real estate investments is we figure out investments to engage in, what works in today's economy, and then participate and spearhead real estate investments, whether they're buy, rent, hold real estate in Canada and the US. We do land development. We've built homes in Florida, in Houston. We do a lot of flipping in Canada and the US. And we also do a lot of passive investments. And as we grow our wealth, for ourselves and our own personal reasons and our portfolio, we share them with the RPI education community, and we share our teams with the RPI education community. So our mission statement, RPI Education, is really we help everyday people build wealth like the top 2%. So I love doing speaking engagements like this, and I've speak on a lot of stages about real estate investing. I've shared the stages with Barbara Corcoran, with Kevin O'Leary, Michelle Romanov, and that's always been really exciting and impactful because it lets you reach really large audiences. We used to have a television show called The Mothers of Real Estate, and I love going on a lot of media outlets just to provide this information because that's what our passion is really to help people get the information they need so they can start investing different. Now, my number one job for all this really is a mom and a wife. So that's my husband, Vaughn. We work together as investors and as consultants, which RPI Education is. And we're also the parents of four wonderful but expensive children. Um, and they're really the reason why we started investing in real estate. Because years ago, our oldest is going to be 21 this April. And I was finishing my master's degree in teaching when I had him. And at that point, I had to go into the classroom and do a 12-week practicum. So I was like in my 20s, we were younger parents, and I didn't know much from anything really. But after kind of trying to juggle being a student, being a mom, being a wife, and now trying to be a teacher, I realized I was selling myself short in all areas. So I really wanted to focus on being a stay-at-home mom. And so after I finished my degree, my husband's from Australia. We were living in Australia. We moved back to Canada, where we live in Markham, and pretty much had number two immediately. And that was my real why was my kids, and I wanted to be a stay-at-home mom. And we were well aware of the cost of living in the Toronto area, and on one salary. And my husband was making great money, but I realized as a stay-at-home mom, one of my main jobs was to really take the finances and put them to the forefront and manage the household budget. And we did things traditionally for so many years. I was reading like The Wealthy Barber and Susie Orman. We were saving 10% of our earnings. We were opening up, RESPs and, for the kids' education and putting them into mutual funds. But there was still never, although my husband was making great money and we were doing everything we were told to do, it never felt like there was enough at the end of the month. And we had no idea what to do in regards to growing our money. So we just did the traditional advice that we were told by our friendly financial advisor. And we continued on this way, doing what we could until 2008 hit. And that was a huge game changer for us because that was our light bulb moment. All of our hard-earned savings kind of just disappeared overnight. And we realized we really didn't have control over our investments and we had to do something different. That was our real aha why moment. And we realized we're just trading time for money, saving money, and we just kind of lost everything. We knew we needed to do something different. And that's when we started investing in real estate. Now, as great as it sounds today, investing in real estate, it always was not that way. It was a very trial and error process. And we talk about this. Oh, sorry. This is what we're going to actually be talking about today about the investing in real estate, the key takeaways that Dave and Karen pointed out here is we're going to discuss the three biggest money problems that Canadians experience and why traditional financial planning no longer works, why real estate investing is the number one real estate builder, and why all Canadians need real estate in their wealth plan. And we're going to walk you through specific strategies that really work in areas in today's market and will help you overcome TTN, which really are the taxes, tenants, and negative cash flow, which are the three deterrents for Canadian real estate. Sorry, but back to my story here. We outline all the mistakes that we made in our first book that we published. Originally, the first edition was published in 2016. We just republished it last year, the US edition, alongside Real Estate Wins, which is what to do. But when we started out in real estate, it really is a learning through doing process. And we made $1 million of mistakes investing in real estate. And we don't want anyone else to make those mistakes. We really love providing these consulting services from the lessons that we learned so people could start building wealth through real estate and alternative investments and not have to go through the trial and error process that we did. And that's really what we highlight in Real Estate Wins. So at RPI Education, we are on a mission to fill the wealth gap. So RPI Education is dedicated to educate and empower everyday people to take control of their finances and investments and learn real ways to build wealth so they do not become a statistic, but instead are able to create freedom in their lives starting today. So this isn't like a freedom and 25-year plan. We want you guys to even walk away from today's webinar learning something new and just that one little piece of knowledge, hoping you can apply it. And that really makes a shift and helps you guys start building wealth. So the three biggest problems that Canadians are experiencing today are the same problems that we are experiencing. One, people are not making enough money. A lot of people feel like there's more month than money. And unfortunately, as Canadians, this is just going to get worse with all these tariffs that are happening and things that are happening currently in our economy. But we also have the income from jobs is not the same as it used to be. And as expenses are increasing, income is not keeping up. Even though people are constantly trading time for money, most Canadians are not making enough money to even live, never mind do all the traditional savings that we're advised to do. Not being able to afford to retire. So a lot of Canadians think the average savings that Canadians have for their retirement is about $250,000. And a lot of Canadians do not have any money to retire. They don't even have money to live, so they don't have money to set aside for retirement. And we like to show people how you can create a multi-million dollar retirement through real estate and real estate investing. And it's really the only investment that could really help you get there. And I don't say that to be an elaborate number, $1 million. Most people say, "Oh, I want $1 million," to make it sound like, they're achieving and striving really high. Whereas in reality, you should have at least $2 million in these savings to be able to afford to retire. If you even do the basic math, $1 million, 20 years is $50,000 a year. So you're not really getting that far ahead. So having a multi-million dollar retirement is not a pipe dream for Canadians. It's actually just the responsible thing to do. And it's very, very achievable. And we'll talk about that today. And the third one is, and all of our faces are blocking my screen, you just have to move us, is we're not able to help out our kids and our grandkids. And for me as a mom, my number one wealth goal when we started investing in real estate was to really pay for their university education. How the heck am I ever going to afford 4 university educations? It's crazy. And we were setting aside $50 a month initially in this RESP savings plan because that's all we could afford. And today, fast forward, 20 years later, our oldest we have two in university now. I'm really glad we did what we did because there'd be no way we'd be able to help them with this expense. And I'm also looking at a new problem today and age, which is really the cost of living. And so many people come to us all the time saying, how are my kids ever going to afford a house? Or how are my grandkids? Most people, even in our category, their parents are helping them out to help with the grandkids. So a lot of people, I think most investments in wealth building come from a point of giving and legacy, and helping the kids and the grandkids is always a really big part of people's wealth plan. So traditional financial planning, I'm going to just quickly run through some traditional advice versus RPI education advice. And these are just some small tweaks that we've made over the years and that we help give the RPI education community. So traditional advice will tell you to, work hard for your money and pay more in tax, where we're really going to, we show you how to get your money working for you rather than you working for your money and to pay less in tax. Traditional advice tells you to save your money. RPI education tells you to grow your money. Savers are losers. Unfortunately, saving doesn't work anymore. We got to figure out how to get the income working for us. Traditional advice will tell you debt is bad. We're going to show you how to use debt to buy more assets, which you'll learn in your mortgage course there, Jeff. Traditional advice will tell you to invest in low growth bank products that you can't control. We're going to show you how real estate and alternative investments really can be game changers in your wealth portfolio. Traditional advice will tell you to buy term insurance and save the difference. We're going to show you how to use insurance for present day and future wealth creation. And traditional advice will tell you to buy liabilities in your personal name. And we're going to show you to buy assets through corporations that will protect and pay for your liabilities. So if you want to be able to keep up with today's cost of living, have the funds that you need to retire, and help your kids avoid student debt and become homeowners, it really is time to start investing different. So why do I love real estate so much versus traditional investments? So the first thing I love about real estate so much is leverage. You cannot utilize leverage in other investment products the way that you can use leverage in real estate investing. So pop quiz, like if I wanted to buy $100,000, or if you wanted to buy $100,000 in stocks, how much would you have to spend? This is when you unmic and answer me. You want to buy $100,000 in stocks and mutual funds, how much do you have to spend?
I would expect $100,000.
That is correct, Dave. Gold star for Dave. If you want to buy a $100,000 property, though, you don't have to spend $100,000. You can spend $20,000 because we always say with investment properties, you should at least put 20% down. The personal residence, you could spend $5,000. So there's no other investment out there that you can utilize leverage like you can in real estate investing. I could take that same $100,000 and buy five $100,000 homes. So the reason why the banks give you us so much leverage in investments is because they trust in this product. They know that it works. They know it's a safe investment. They trust in it so much that when we're putting our money in the banks, in these savings accounts, trying to do things the traditional way, they're actually taking our money out and doing this. So while we're getting 0.01%, they're getting 26% or 48% or whatever strategy they're utilizing in the real estate investing. So it is the only investment product that you can actually do this. So although it is an expensive investment to get into, it really leverage helps you do a lot more with your capital. You could also control your investment. And after what happened to us in 2008, the only thing I could do with mutual funds, well, mutual funds is just a diversification really for people who don't know what they're doing, because I could never select any of those funds. They were pre-selected for me. So the only question I was ever asked was, what's your risk tolerance, low, medium, or high? And from there on, you just select that and it's done for you. And then what happens, happens. And I feel with stocks and these sort of things, like people could read up on investments and try to do things, but who has the time? Unless you're a professional stockbroker and professional investor, do you really have the time it takes to put really in and monitor exactly what is happening and to make these best decisions for you? Real estate is a very, very simple investment and one that you can control because you could pick a lot of aspects. You could pick your property, you could pick your price point, you could pick your tenants, you could pick your strategy, you could pick your return on investment. And because you could pick all these things, you could also plan for problems. And you can't do that with other investments. So for example, anything you're scared of that's stopping you from investing in real estate, you should really bring it to the surface and write that down and acknowledge it. So if you guys are scared of a huge drop in the housing market, like what if my investment goes down $100,000, $200,000? You could plan for that in your purchase price when you're buying the home. If you're scared of tenants not paying for a year and a half, and rightfully so in Ontario, it could be really, really scary for landlords. Plan for a year and a half of vacancy. And so there's things that you could, if you're scared of tenants damaging your property, you could have vandalism insurance. So whatever it is, as long as you're buying great properties in great areas, real estate is something we all definitely need in our portfolio. And anything that scares you about it, like increased interest rates, we were doing our interest rates always at 6% for the last 14 years. And upwards to 10 or 12. So you could always take these numbers, put them into your equations, and we give you all these equations and really plan for worst case scenarios. You're not able to do that in other types of investments. The third thing that I love about real estate so much is it's tangible. So it's unlike a stock or mutual fund. It's not just a blip on a computer screen. I can see it, touch it, feel it, taste it if you want. You can actually drive past your properties and physically go in. So it's a very, very easy to understand investment that actually exists. And lastly, people will always need places to live. So this is just like Maslow's hierarchy of needs. And as long as you're buying homes in great areas and giving people great housing, there's always going to be demand for your product. So this is what we created here at RPI Education. It's whatever we feel this is what every Canadian needs in their portfolio to solve these three money problems. And it's called the Real Estate Wealth Formula. Now, you do not have to be a full-time investor like Vaughn and I are. That's not a mandatory requirement to invest in real estate. But every Canadian and American needs these three investments in their portfolio so they can solve those three money problems, make more money every month, so they're able to have a multi-million-dollar retirement, and they're able to help their kids out. So this is another thing I love about real estate so much is that people have these three things: the primary residence, 1 to 3 investment properties, and 1 investment for extra cash flow. I just wanted to show you all how achievable real estate is. Many people feel that real estate investing is buying a property and living off the cash flow from the rents. And in real estate investing, cash flow is the number that you have in your pocket after you take your income and you minus your expenses. And it's very, very hard. That's not the way real estate investing works. If people were to live off the cash flow, even if they paid off their mortgage entirely, you'd have to have like 100 properties. And having 100 properties is like having 100 kids. And I have 4 kids. So you don't want 100 of them. So when we started out, we really were doing a more is more strategy, which led to $1 million in mistakes. That's what a lot of people think. But all you need, real estate is such a powerful investment, is with these 3 investments, this could be a total game changer. And I just wanted to see if I could see a show of hands. How many of you feel this seems achievable to recreate wealth in your portfolio with just 3 properties? Does that seem a little more achievable? I can see Dave's hand. Jeff doesn't believe me. He doesn't think it's achievable. Karen's about to put up her hand now, I bet. Oh, people pleasing. Thank you, Cliff. So it really is easy. It's really not hard. We're going to get into show you exactly how to do this. Now, why most people do not invest in real estate? They say 90% of the world's millionaires invest in real estate, yet only 6% of the population invest in real estate. We all know it's the right thing to do. What is stopping people from moving forward? Well, the first thing is time. I mean, we're all busy working jobs, most of us. And when you don't have your jobs, you're with your family or your kids, and hopefully we have some hobbies. So who has the time, to be searching for properties, figuring out how all this works, educating yourself, building teams, and managing your investments? A lot of people do not have the time to do this. The second thing is knowledge. So a confused mind does not act. A lot of people know it's the right thing to do, but they're just not sure about all the pieces and systems and the confidence in themselves to put these pieces together without the support. And that's really good because you do not need to go into this unaided like Vaughn and I did. We invested a lot of money in real estate investment courses. When I say a lot of money, I'm talking 6 figures. But where was our coach when we were in the construction field and our whole development was going belly up, or when all of our tenants weren't paying rent and property managements were going corrupt and all these crazy things were happening? People will sell you courses and give you information, but what you really need is a community of experts and support to guide you in real time when things are going. So I find this is great that people are concerned about moving forward with knowledge because you should be moving forward with some assistance for sure. The third thing is money. Like, who has any money to invest in real estate this day and age? It is the most expensive investment to get into. I mean, even if it was $100,000 house, which there's not $100,000 house for you to buy, $20,000 is still a lot of money. And a lot of our investment models, you're going to have to come up with $250,000, $500,000 to get into in certain high growth areas like Toronto. And that is a lot. That stops people. And I remember what this was like. This stopped us for years before we got into investing in real estate. We did not have any extra money. I thought real estate was reserved for the wealthy and for millionaires. But believe me when I tell you, and what happened with us is you really are richer than you think. And no, I do not work for Scotiabank. But it's a really good saying because it's true. You are richer than you think. And a lot of us have more money than we are even aware of. Lastly is fear. So the acronym for fear is false evidence appearing real. Who wants to take $250,000 of their hard-earned money, throw it into the real estate abyss, be threatened with market drops, increased interest rates, and no one paying their rents, because that's the reality in the real estate world. No wonder why people are scared. To top it off, we have the media who's consistently feeding information about recessions, economic drops, all these sort of things. So people are paralyzed and they're standing on the sidelines waiting to go. I wish this fear kind of happened during COVID in the real estate. No one really was scared then, and they should have been. But today, especially this day and age, fear really stops people from moving forward. So people ask me all the time, is now the time to invest in real estate? And there has not been a better time to invest in real estate since 2008. Because in 2008, which was a horrible time for us and for us personally, there was another whole situation going on, especially in the US with the housing crisis, where people lost everything. And it was a huge, you know, challenge in the housing market. But there was also a group of people out there who understood real estate and how real estate investing worked, and they made fortunes in this market as well. And when I say this, I'm not saying that these are malicious people or predatory people. They did not do it at the expense of others. They actually were able to come in and help a lot of people maintain their homes and help people as well. But these people just understood how investing works. They understood this rule that Warren Buffett says here, which is everyone wants to buy low and sell high until it's time to buy low. So like buy low, sell high is the number one rule of thumb in real estate investing. And now is the time that you don't have your competition. During COVID, everyone was buying real estate and they were paying up to $600,000 over asking in low growth areas. People were railroading each other. What do you think we were doing during that time? We were leveraging, refinancing, and selling in tertiary markets because we knew that our investments were doubled, sometimes even tripled, and they were never going to get to those amounts again for many, many years to come. So, well, everyone else now is on the sidelines. This is really the time to move in and to start making these major moves because you can get significant discounts. And in real estate, we're always buying low. We want to make money when we buy. Okay, so it doesn't mean making money at a huge discount, it just makes money when we buy. So we have that security and that built-in equity. Now we've had six mortgage rate drops now so far this year. Things are finally coming down. What do you all think is going to happen to the real estate prices in the next few months? You think they're going to go lower, Chantal? Dave says higher. What do you guys think? What do you think, Jeff? Lower or higher?
They're gonna go higher.
Technically, the way it goes is everyone has that herd mentality and they're like, oh, interest rates are lower. So now it's time to buy and or interest rates are higher. Now it's time to stop. As investors in anything that you invest in, it really is having that control and understanding how it works and knowing how to really kind of, work the market and when to buy. So this is
Anybody
an excellent.
thinking of tariffs? Sorry to interrupt, but it's like, I think we are joking when we
Yes, I'm
say,
totally thinking of tariffs. I'm also thinking of the housing crisis that we have and the fact that people need places to live. Regardless of everything going around us, people have to have places to live. And that's the beauty of real estate is there's always like that demand. But Chantal, you are right. There are so many things going on, and that's all we talk about at RPI education is
and
taxes,
don't you think that
tariffs,
pressure will
politics.
force prices down? Because nobody
No.
can afford them as is.
Exactly, exactly. So that's why I'll get into showing you how we could still participate in real estate, how real estate can still be a good investment, and despite the taxes and the tariffs and all this economic uncertainty that we're going into. Because you're right, it's a great time to buy, but you have to be able to do these three things. It's not a time for novices. It's not a time for novices to go in because you're right, Chantal. Like tariffs are huge, economic uncertainty is huge, housing drops can happen. If there's a housing drop, it doesn't mean you still can't buy real estate, by the way. We could still buy real estate at a discount as well. So that I firmly believe there hasn't been a better time to buy, but you do have to do these three things. One, you have to be able to find great deals and make money when you buy. So what that means is if you're going to buy $1 million property, you should probably pick it up for $800,000 and that those are available now. You have $200,000 equity in your home. If you have to understand strategic leverage and mortgages. So Jeff, I'm sure you're learning all about that. If you don't understand how mortgages work and you don't understand how strategic leverage, not just leverage, but strategic leverage means the ability to assess your current situation, assess your assets, and also comprehend your situation of how you can borrow money still without putting yourself in a compromising financial position. And the third thing is you need to understand return on investment, ROI, so you can recession proof your investments. And like I said before, most people only look at the cash flow in real estate investing. Otherwise, it's called the income. there's three other important components in return on investment in regards to real estate. And you have to understand these different types of ROI components in order to really know what to hone in on and what to maximize, because just buying homes and renting them out no longer work in this market. So let's go back to the RPI wealth formula and really show you guys how we utilize these to help people build wealth in real estate and also help people do this despite the tenants' taxes and negative cash flow. And I'll add a fourth T for you, Chantal. We'll say tariffs as well, okay? So it'll be like tenant taxes / tariffs, okay? So how many of you here have a primary residence? Everyone? Excellent. So most hands are going up. If you don't, that's fine. You don't need to do this in order. But most people, and I think that they don't have any money, but most people also have a primary residence, and that's usually the number one crux of their wealth plan. And they're planning on using that for their retirement because you know that real estate, even if you're not a real estate investor, people think that they have real estate in their portfolio. Now, I'm a huge Robert Kiyosaki fan, author of Rich Dad, Poor Dad. If you haven't read that book, I'd really strongly recommend it. It's amazing. He talks about assets and liabilities. And one controversial statement he says is that your home is not an asset. Your primary residence is not an asset. It's a liability because assets put money in our pocket every month, while liabilities take money out of our pocket every month. And so although most Canadians are paying off their mortgage as fast as possible, you still have expenses. You still have taxes, you still have insurance, you still have heating, you still have like upgrades, all these sort of things, maintenance. So your house is really a liability because it continues to take money out. Even after your mortgage is paid off, if it's not putting money in, it's taking it out. So one thing that made a huge difference for us, for Vaughn and I, it was strategic leverage. And we got started investing in real estate because most people who own a home have a significant amount of equity built up in their home. Rather than have your house be a liability, why not turn your house from a liability into an asset by borrowing strategically, not everything, having a strategic loan so you could buy an investment property. So let's pretend you have, say, $1 million home. You probably have maybe say your mortgage is paid off. There's nothing wrong. It's pretty safe to borrow, say, $150,200 in a HELOC, or you could refinance. I prefer the use of HELOCs. That you can actually borrow this money, or consolidation mortgages like Manulife One. That was a huge game changer for us. But people could borrow a small amount of equity and use that to buy an investment property. Now, the investment properties are currently pretty expensive. We invest in high growth markets. But what you could do with the properties that we've been utilizing is the BRRRR strategy. So let's pretend if you wanted to buy a house in Toronto, and yes, there are opportunities in Toronto. Actually, Toronto has had a huge drop in housing prices. This is an excellent time to buy properties right in Toronto right now, because there's always going to be a need for housing in Toronto. And the housing that we're creating is not just single family housing. What we're doing is we're buying these homes, making money when we buy. So we could buy homes, maybe they're usually worth 1.2, 1.3. We could pick these homes up for $800,000, $900,000. It's always below $1 million. And we take this single family home and we are doing conversions, duplex to fourplex conversions. And this is called the BRRRR strategy. So we're buying the homes, we're renovating the properties from a single family to a duplex to fourplex units. Then we're renting them out. And rather than just having one renter, now you're going to have between 2 to 4 renters who are going to come to your house in a great area. And it's a new construction property because it's brand new. So you're going to be able to attract great tenants. And we call these tenants Henrys. These are the tenants you want. High earners, not rich yet. So you want these people who are kind of coming in, new to the city. They're sort of working their way up, and they're going to probably live in your unit for maybe a year and a half before they go on, because you could only raise the rents in Ontario real estate by 2.5%. We don't want to displace people. We don't want to kick people out of their homes. People need places to live. But you're actually helping solve the housing crisis because you're not just providing housing for one person, you're providing housing from 2 to 4 families, which is great. Now, after you do the renovations on this house, you've increased the value of the house significantly. So let's pretend the value of the house originally, say, is 1.2, but you're able to secure it because a lot of people really want to get out of these properties. They have that fear. They think they're better off selling. They sell it for, say, $800,000. And now you put your construction financing in there. We utilize construction financing. You're able to increase the value of this house to $1.6, $1.7 million. You're able to now get a HELOC against your investment property. This is where you do the refinance, pull out a large chunk of your down payment and construction costs that you put in, and repeat it by using that money on a second home if you choose to do that. So that also is a tax efficient strategy as well this day and age, because you are not taxed on the refinance or establishing lines of HELOC and borrowing funds this way. Now, usually when you're flipping a property, yes, there's going to be high tax. They've increased the capital gains. I believe 66% if you're in a corporation, 50% if you're personal. Although we always say you should do things in corporations, but this is a tax efficient way that you could take that and you can actually use that money to buy another property if you want. Now, once the income on this property is achieved, then you keep the property and you rent it out. So now you have a nice tight portfolio. If you just wanted this one property, you're now able to have 2 to 4 units just under one roof in one area. That's good enough. This is going to be your multi-million-dollar retirement right there. Even if you do a natural appreciation conservative return at 5%, you're going to take this investment and it's going to be a multi-million-dollar investment by the time that you retire, whether you choose to pass it down as a legacy or whether you choose to sell it at that time. You could also use this in the meantime to help your kids out. So let's pretend you have, say, 3 kids and your kids are younger now. They're not school age yet. After 5 years, as the natural appreciation builds in these properties and as these tenants are paying down your mortgage, so we also have the mortgage pay down as well, you're continuously building tremendous equity in this property. So first year alone, by creating the value, you're at about 109, 110% ROI. Maintaining this investment just based on the actual natural appreciation, the depreciation, and the income from the property, you are now going forward along at least between a 28% to 48% annualized ROI, like total ROI. There's no other investment out there that's going to give you this return. You can control this investment, save it for your retirement, and also use it in the meantime to pull out money and actually through strategic refinance, gift your kids money for a down payment, or even help fund your kids' education like we did. Did anyone have any questions about this? Because I know it's a lot of information. No? Is it clear? Clear as mud?
Yeah, no, I'm a real estate investor as well, so I'm good.
So you get it. You get it entirely. Now, the investment for extra cash, I want you guys to also remember that when you are getting your income from these properties, even in this interest rate market, since we're in such a high interest rate market, the first component of our ROI that you're utilizing in this BRRRR strategy is the forced appreciation. That's how you're getting 109% return, because you're actually adding such significant value on this investment. But the years afterwards, our goal is cash flow positive, obviously. But for a long time with the interest rates too, sometimes it's even more of a close to a cash flow neutral goal, because you really do not get rich off the monthly income. Chantal, do you agree with that? Because you're a real estate investor, you don't really get rich off the monthly income that comes in on the properties. An extra $1,000, $2,000 a month helps, but does that solve everyone's money problem?
No.
Unless you have 100 homes. And do you want 100 homes, Chantal?
Oh my God, no.
No, we don't want it, because active real estate can be a huge, huge pain in the butt.
Some people do.
Some people do, and they should be operating funds, REITs, mix. We help them do that. But to have like just a bunch of properties floating around, it's pretty chaotic. But what you're getting on these BRRRRs, I mean, you could be pulling out anything from 75,000 upwards to $500,000 on the refinance of the property, depending on how it's strategized and what you put into it. So it's really, really an amazing way that you can actually almost create this mortgage recycling system for yourself by continuing to add more properties using the down payment or even just keeping it and using specific refinance strategies throughout the year. So you can kind of look at it one of two ways. It will bring in extra cash every month, which is amazing. And there's other things we could do in real estate to participate in that will bring in cash, like flipping homes. Now, I know flipping homes in Canada is tough, but once again, it's just a number. And as long as we could add that extra tax implication into your numbers, you just have to adjust all your other numbers to make sure you're still profitable. So when we flip homes, we're basically buying a home, fixing it up, and reselling it. And usually the average time it takes is 5 months. So we have 12 weeks for the actual flip from acquisition to completion is 12 weeks. And then even if someone buys your house right away, and they won't in this market, right, Chantal? You have to have this house sitting for 60 days. Even if they bought it, they're going to want 60 days to close. So in a 5 month period, you can make anywhere from say 25,000 to $200,000, which is an excellent, excellent way that you can create extra income for yourself. We do have flip opportunities in the US, primarily Texas and Arizona. Investing in the US is also something not as easy as they make it sound on TV. All these Canadian investors are out there talking about how the US is so great. The US is a really great market to invest in. We have full service teams in the US, but it's not easy for Canadians to invest in the US. It's not easy for Canadians to get mortgages, and it's not easy for Canadians to put up with this horrible dollar exchange that we're having. And it's also not easy for Canadians to even move money across the borders and do these things. So fortunately, we do have solutions to a lot of these problems and these sort of things. But it just shows if house flipping is something you want to do and it's no longer feasible in Canada, primarily Ontario. Also remember, we do operate in Calgary, which is a totally different market, an amazing market. The US is always an option as well. And lastly, a third option if you want to invest for cash flow, and this is one we personally focus on, is midterm rentals. So when we go in, we buy the property, we make money when we buy, we increase the value of the property, pull our money out and rent for tenants. We're actually going to furnish these units and actually put them as midterm rentals, meaning minimum 90-day rentals. So now we don't have to worry about problematic tenants staying forever and ever, really damaging your property. You attract a different client avatar, and you could charge twice as much rent as well, because a lot of people do not want to sign a 12-month lease. So you're really kind of providing a solution to their problem. So basically, by having your primary residence, using money from your primary residence, you can get started by buying an investment property. We have these conversion models in Toronto. We do them also throughout the GTA, St. Catharines, which is a lower price market, and the Simcoe County, which is Orillia, Barrie, and Wasaga Beach. So we have full service teams there. Calgary, and then we have our 3 US markets, which is Florida, not Disney and beach. We don't do that. High growth markets, as well as Texas and Arizona. Those are the 3 markets that we're currently operating in. And so once you get your investment properties there, you could have your buy, rent, holds, utilizing the BRRRR, as well as having an investment for extra cash flow. And this in turn solves all 3 of those money problems. Do we have any questions? Anything? Okay.
Well, I'd love to talk to you separately after.
Oh, yeah. It'll be great. That'd be a great conversation. Here's an example of one of our students, Travis. He actually came to us and we showed him how he had a house. He lives in Oshawa. We showed him actually how to use his primary strategic residence from his primary residence. He ended up buying an investment property converting it into a duplex, moving into the property, then kept his existing property, turned around, duplex that, and now he's bought a third property, which he's in the process of duplexing, and he's going to triplex the initial duplex. And he wants to do this full time now. So his first acquisition was done in 12 weeks, which was super exciting and shows how achievable this really could be. Another student of ours, Shashank, it was really interesting. He came to us a couple years ago, and at this point, he didn't even have PR. He was in the process of getting PR, but he wanted to learn more about real estate, learn about wealth building. But in using our community, one of our mortgage specialists actually was like, "Hey, I actually found a lender for you that can help you get a mortgage while you're going through the PR," which was super exciting. And he actually ended up buying a house. He was living in Oakville. He ended up buying a house in Burlington for $300,000 below fair market value, converted it into a duplex, lived in the top, rented at the bottom, and pretty much was making money while living in his house for free, and then used the strategic refinance to once again get started on his investment property. And Peter's one of our US students. He's in Arizona, and he had an interesting story because he worked in IT. A lot of our people work in IT, and they're really, really nervous about the job uncertainty in the IT market. So he did not want to really do too much. He was doing buy, rent, holds in Costa Rica because that's where he was originally from, but he was doing a lot of flips for income replacement in Arizona, where's where he was currently residing with our team there. And so he goes to work every day. Sometimes freedom in your life is not about not working. It's about going to work every day and knowing you do not have to be there, which is super exciting. And then there's us. This is our family now. This is us celebrating our 20-year wedding anniversary in Turks and Caicos. And I have been a stay-at-home mom still for over 20 years. And my husband was actually able to leave his six-figure job at the age of 40. So after we worked our way through all those mistakes, figured out what we're doing, regrouped, and created these systems that we share with everyone at RPI, this freedom was something that was really high on our list. It took us 5 years to do it, but he actually was able to go to his boss's door on his 40th birthday, the exact day to the day, knock on the door and quit. And we've been doing this full time. So now we're both doing this full time now, which is exciting. And it's been for over 8 years now, scarily enough. We have university education paid for all four of our kids. The two kids on the end are currently, studying and at university right now. We have created a multi-million-dollar retirement savings plan and a legacy for future generations. And so these are kind of the goals that we really like to help people focus on at RPI. It's not like the Tom Vu days with the fountains and the dancing girls and the helicopters and the jets and all these sort of stuff. I think people's goals are a lot more humble than that because we really just want that freedom, that financial freedom in our lives. And after we get you those goals, we certainly can work on the jets if that's what you really want. But this is really what we kind of doing this for over 12 years, running this business. We've noticed this is really more of the goals that we've been helping people achieve. And my idol, Robert Kiyosaki, here says most people never get wealthy simply because they're not trained financially to recognize opportunities right in front of them. The rich have learned to recognize opportunities as well as how to create them. And that's what I'm very, very passionate about, is showing people, everyday people, to invest like the top 2%, introducing people to these concepts that the top 2% are not privy to, but they're consistently utilizing, and it's something in their blood that they have been born into or they've done, and this perpetuates wealth and generational wealth. And if we don't change financial literacy in today's society and people keep doing what Vaughn and I were doing and just following those traditional ways, doing the same thing over and over again is the definition of insanity. It's actually getting worse now. Nothing's ever going to change. We just want to introduce people to these concepts. We're consistently creating courses, curriculum. We're trying to get it also into the schools. We were piloting some programs into the schools to teach the children, but my main clients are adults like you guys. Because you can teach the adults and they can make these small minor tweaks. We could really fill that wealth gap, and then inadvertently they can teach their kids these habits. So the 7 keys to building wealth, like the top 2% that we create in our wealth immersion program, is investing in real estate, which is just module 1. We also have the strategic leverage and mortgages, the self-directing passive investments. Most people don't know they can't self-direct their registered funds. Insurance, how to use insurance while you're alive as a wealth tool while you're alive, just not when you pass. Taxes and accounting, what's the point of doing all this if we're going to lose it all in taxes? Incorporating, so we have the proper use of corporate structures. If you're buying everything in your personal name, you're not running your real estate business. And lastly, estate planning. How can we tie all this up in an efficient manner so we're able to pass this down for ourselves, when we leave this earth? Hopefully we pass this down to our kids, or at least we pass everything down in a tax efficient manner. So while real estate investing is really exciting, these other six components are very, very important. And we have wealth specialists in each one of these fields that are licensed and operating and are able to help people just learn to do things a little bit different, and in effect achieve huge, absolutely huge results from that. And that's the presentation. Did you want me to stop sharing, Dave, or?
Yes, please.
All right.
All
All
right.
right.
So
Hope I didn't put
we'll
everyone to
just open
sleep.
up for questions at this point. So
I don't have a question, and I don't have much experience with real estate. And the experience that I had was really not a very good one. But I just wanted to thank you and tell you that it was a great presentation, something that we can all understand and figure out. So thank you.
Yeah, and I'm sorry you had a bad experience
Yeah.
in real estate. A lot of people come to us who've had that bad experience, and it really, once they work past the fear and then they do it, and then something happens. A lot of people just go, "I knew it wouldn't work," and they go back to doing what they did before because it could be very, very like costly. Mistakes can be really, really, really costly. So I'm sorry that that happened to you. But in reality, if you have a look at those three components, and I'm sure you're living somewhere, right?
So yes, I live in New York.
So whether you're renting or you're owning, you have a house or real estate. We're all impacted by real estate, whether as renters or owners. And I think every Canadian really needs just to look at that three tier and say, how can I, have my primary residence with the purpose of buying one investment and then also investing, maybe even if it's with others, a little more passively, because I'm sure you're super busy with your business, and how you can get other people to kind of do that for you. Those are the three things that people really need to work on.
Yeah, thanks.
You're welcome.
Thanks. It was a great presentation, though. Thank you.
Thank you.
yes,
Thank
indeed,
you.
it's a good presentation. I think Chantal has a question, but yeah, if you can get those digital hands up, that would put you to the top of the screen. That would help. Go ahead, Chantal.
Yeah, my question is, so I'm a real estate investor to put things in perspective, and perhaps once you talk to me, you can publish a new edition on your books of mistakes. Um, because while I was doing very well, my last strategy has costed me everything. So that's the risk in real estate, and it is real.
What was that strategy?
It was a student rental, so in itself, it's not a risk. But I did the plan was to do a BRRR,
Mhm.
and I'm stuck in the middle of this conversion, and I can't get out of it. So anyway,
What area is it
that's
in?
not my question. That's not my
Oh,
question.
okay.
You and I can talk about
Let's
that.
talk about that after. Yeah.
Yes, yes, yes. My question is, you're very right. A lot of us do what we do thinking of our children, our grandchildren. So what do you think of the rent to own strategy in the current market?
You know what? Rent to own, I've done a lot of rent to owns. The thing I don't like about rent to own is that you do not own your asset afterwards. Okay. So rent to own, if you, I like to teach people to do rent to owns if they currently do not have a primary residence or the funds. I could show people how to negotiate a rent to own with their current existing landlord or to get into that strategy for themselves. So they're able to do that. But in regards to investing in rent to owns, the thing I do not like about it, it's good for cash flow every month, but I do not like the fact that you do not own your investment afterwards. And I also do not like the fact of the control that you have in regards to, like, a lot of rent owns could have gone belly up because if they made that agreement to purchase that house for X amount and there is a huge market drop, that property is not going to be successful. It's not going to close. You're not going to get your return on investment, so to speak. So I think it's complicated enough to even keep up with the cost of living and for people to even qualify for mortgages or standard things. Most people can qualify for some sort of mortgage product before having to go through the rent to own process. So it kind of introduces you to a complicated tenant avatar, a very niche, complicated tenant avatar. And that always, as investors, heightens our risk and makes things a bit nervous. We do work with a very, very credible rent to own company. And if anyone wants to benefit from rent to owns or do a rent to own on either way, I'm more than happy to do an introduction. But there's also a lot of like rent to owns done wrong. And their primary thing is to take that option fee from the tenant buyer, hoping that they're not able to buy the home. And we're in this to help people.
Yeah.
So we
Right.
certainly don't like that. So it's great to want to help people. I think most people need to start helping themselves first in today's economy. And another great way to help people is to provide housing. And when you're doing the BRRRRs and you're doing these conversion properties, you're actually providing housing for people, which is and clean housing, safe housing, and good housing. There's a lot of bad housing out there too. So that's kind of the strategy that we like to focus on. Were you looking at starting to do rent to owns or?
I've done them in the past, by the way. So yes, I totally agree with some of the statements you made. And you, as an investor, you don't want to do it for the wrong reason. Agreed. Totally agreed. However, if you as a tenant buyer get into it knowing and negotiating it the right way, I think it could help a lot of people currently in need of getting into the real estate market, you know. And I don't know who you know. I know a few people that do it as well, ethically and the right way. So I was just curious in terms of the market conditions, um, what your
I
thoughts
think
were.
you two have a lot to talk about. But
Yeah.
since we only have 20 minutes left, let's move it around a little bit. All right. So Chantal, make sure your information is in the chat, and Monica, make sure yours is in there as well, so you can connect directly because you guys got a lot to go. I do have a question though that I wanted to bring up. You mentioned something about 5 months, the duration of this, the average is about 5 months.
Yeah.
What happened in 5 months? You add to a home, you resell it, or you just rent it out and somebody else takes over. What happened in that 5 month period?
Oh, that's for house flipping is 5 months. BRRRRs take longer. So
Okay.
BRRRRs can take 8 months to a year. While you're doing the conversions and doing the whole process, like from the BRRR. So the construction should always be very, very strict on point and on budget. And in a house flip, and it's not like it is on TV, like you just buy a house because it has ugly curtains and green carpet, you're going to get a huge discount on this
Mhm.
property and you're just going to paint the walls and make $200,000. That's not the way, it's not that easy with house flipping. But in a house flip, if you're not getting your project completed in that 12-week time, just with the existing footprint of the home, you're not flipping a house. A lot of people think that they're house flippers and because they live in a house and fix it up or and live in it for a few years and benefit and then move to the next one. That's also not house flipping. So Dave, in answer to your question, that was 12-week budget is just for a standard house flip, meaning you're going into a house, you're not changing the footprint, you're pretty much redoing kitchens, bathrooms, making it look great. You might be adding a basement suite, doing these sort of things. But that is done in a 12-week period of time. And then after 12 weeks, you need to list this property. Because if you keep dragging out your project, you will go so broke. So
Okay.
house flipping, you got to be really on time, on point, and on budget. Now, if you're expanding the footprint of a house and you're doing a new development component on it, give yourself a year. But you're also your margins are going to be much greater as well. So we
Mhm.
say if you're just going to flip a house, we used to say $25,000 minimum in 12 weeks. That would be like your minimum thing after all these unexpected cost cushions, because a lot can go wrong. Now in this market, I'd say you want at least more of a $40,000 profit. Otherwise, it's just not worth doing it. Um, it can go 40,000 to 150,000 still. But if you are doing the actual development footprint or some sort of changing that's going to take like a year, you want at least a six-figure return. Like you at least it's not worth doing it for an extra unless it's like an extra $100,000, probably more like 120, 150 in your pocket. The risk is just too high. And in this market, if any of you are looking to flip homes, be prepared to hold your property because properties are not selling quickly. So the way that we kind of have done that is we'll go to flip it, but we also need that another exit strategy, a plan B. We'll usually need a plan A, B, C. In today's market, you need a plan A, B, C, D, E, F, and G. So you got to have a lot of exit strategies in today's market and really be prepared to hold those properties as well.
All right, let me do this. I'm going to stop the recording so that if you guys have questions that you don't want to be recorded, you can actually ask them directly now. So